There's a reason. The reason I have this button on my soundboard. It's the sound of a strike, of a ball hitting the head pin, sending the rest of the pins flying. Oh, it's a beautiful sound. It always surprises and it always delights. Last night, Nvidia bowled a strike. And today, stocks of all kinds careened and skidded and vibrated and rocked in a symphony of glorious sound. The 10th average is soaring, with the Dow jumping 462 points, S&P gaining 0.53%, and the Nasdaq advancing 0.03%. Nvidia's been duking it out with Apple and Microsoft in the lanes, fighting over who gets to be the largest company on earth. Right now, it's head-to-head with Apple. $3.5 trillion for Nvidia versus $3.45 trillion. Apple. Yes, that's right. Nosing out Apple as the champ. Microsoft has suddenly fallen way behind. The leaderboard drops off even bigger than. Whoa, make no mistake about it. Nvidia's strike last night is opening some distance between it and the rest of the field. The numbers are staggering for a company just a few have even heard of, say, recently as 2 years ago when its market cap was just $500 billion. Nvidia booked $35 billion in revenues last quarter with a net income of $20 billion, 75% gross margins. Those numbers are preposterously great, just a spectacular ramp up. Now, a year ago, so many critics were claiming Nvidia was absurdly expensive, trading at 50 times forward earnings. People laughed at me for championing this seemingly overvalued semiconductor stock.
Hold on to your seats, stock market enthusiasts. The tech world is buzzing with what could be one of the most pivotal moments in artificial intelligence markets. Nvidia, a name synonymous with cutting-edge AI technologies, is making waves yet again, cementing its foothold as the kingpin of AI semiconductor dominance. What's the buzz all about? CNBC's Jim Cramer can't stop praising Nvidia's stellar performance, and their latest financial results are nothing short of awe-inspiring. While competitors scramble and tech giants like Apple and Microsoft gaze upwards, Nvidia's towering ascent in AI infrastructure could redefine industry standards and investment paradigms. But what exactly is fueling Nvidia's meteoric rise in the stock market? Stay tuned as we dive into the depths of their revenue growth, unprecedented technological advancements, and the strategic partnerships shaping the company's promising future. Welcome back, everyone, to Investocracy.
Nvidia's been duking it out with Apple and Microsoft in the lanes, fighting over who gets to be the largest company on earth. Right now, it's head-to-head with Apple. $3.5 trillion for Nvidia versus $3.45 trillion. Apple. Yes, that's right. Nosing out Apple as the champ. Microsoft has suddenly fallen way behind. The leaderboard drops off even bigger than. Whoa, make no mistake about it. Nvidia's strike last night is opening some distance between it and the rest of the field. The numbers are staggering for a company just a few have even heard of, say, recently as 2 years ago when its market cap was just $500 billion. Nvidia booked $35 billion in revenues last quarter with a net income of $20 billion, 75% gross margins. Those numbers are preposterously great, just a spectacular ramp up. Now, a year ago, so many critics were claiming Nvidia was absurdly expensive, trading at 50 times forward earnings. People laughed at me for championing this seemingly overvalued semiconductor stock. Well, when we see the actual numbers, it turns out that a year ago, Nvidia was really only trading at 20 times forward earnings. That's how incredible these results were. In retrospect, it was cheap. That's what happens when a company outruns the estimates. And as I've told you repeatedly, Nvidia's been outrunning the estimates for a decade. Super expensive? Nah, perfectly reasonable. That's the stock that is Nvidia. It's why I've loved it for so long. How do they do it? Oh, Nvidia's rolling not one, but two balls down the lane. One being accelerated computing and the other being artificial intelligence. It's all happening because CEO Jensen Huang and his team may be the best bowlers of all time, figuratively speaking, of course. This morning on Squawk on the Street, my fabulous partner, Carl Quintanilla, started off the show by asking me what I thought about Nvidia's quarter. At the time, the stock was down a buck or two, and I was muted. I was clinical. Not wanting to hype a stock I've championed to the point of ridicule. But then I sat back and I paused for a moment. Not my strong suit. And I said that, frankly, I've never seen anything like what's happening at Nvidia. Never. Just never. And even though the stock was down, despite 19 firms raising their price targets this morning, I said this stock's simply not capturing the seismic shift that's happening here. See, Nvidia is disrupting everything we know about business.
With a whopping 181% surge in its stock price this year, one might think Nvidia has discovered the mythical fountain of financial youth. In truth, their success is deeply rooted in the impressive $35.1 billion earned in the third quarter revenue alone, a striking 94% increase from the previous year. The data center revenue reaching $30.8 billion highlights Nvidia's indispensable role in AI infrastructure, a sector seeing unstoppable demand from major cloud providers, eager to equip themselves with AI capabilities. Let's zoom out and see the bigger picture. While Apple's 25.44% and Microsoft's 12.92% yearly growths are noteworthy, Nvidia's unparalleled market supremacy, as Jim Cramer humorously notes, resembles a scene from a stock market drama. The competitors are more like chess pieces on Nvidia's board, Cramer chuckles. Nvidia CEO Jensen Huang goes beyond charismatic soundbites, emphasizing that for every dollar spent on Nvidia's chips, customers gain a $5 return. It's a compelling case that leaves no room for hesitation in having those chips become a staple in technological outfits around the globe. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
All right, let's start off. You're going to actually give us the word of the day today. What is it and why?
Fire. Because I think this is a tech market that's going to be on fire, not just for going into the end of the year this week, but what I believe right now, this AI revolution, it's hitting its next phase. And I think this is just still the start of a fourth industrial revolution.
All right, still the start, but you always say it's 9 o'clock. It's got to be 9:30.
No, I actually said it now. It's 9:30 to 10 p.m. in the AI party. That goes to 4 a.m.
All right, so you have a number of upgrades in the space, specifically in the software space when it comes to AI. One of them is Snowflake. The other one's actually Elastic. We've been fortunate enough to have the CEO on the show. Kind of a broad-based play. They do cloud, they do security as well. Why these two names?
Look, I think, and we've talked about a lot here on the show, now the second derivative, the software piece of AI is here. I think in 2025, that's going to be the key. You look at Elastic, Snowflake, names like MongoDB, they're the ones now that follow names like Palantir in terms of the software, the use cases. I believe the software AI age is now here. 2025, that's going to be front and center. That's why we upgraded those names.
All right, so both of those names have recently had earnings, actually. We're going to show the charts. Big jump. Snowflake's up over 25% since earnings. Elastic's up over 20% since earnings. What's going to push them even higher? I mean, they've had big spikes post-earnings. What else is going to happen that's going to be another catalyst?
That's just the appetizer in terms of where I believe these stocks are going. Because now the consumption model, what's happening across enterprise AI, obviously it starts with Godfather of AI, Jensen, Nvidia. But now you look at the consumption piece, these LLM models, what you're going to start to see, I believe earnings and overall growth is being underestimated potentially by 15, 20% over the next few years. That's why you look at names like Snowflake, Elastic, Mongo. It all starts, obviously, with Messi of AI, Palantir, but this software phase is here, and it's just the beginning.
All right. So how does the idea of bond yields play a part of this? I want to ask you, probably back in 2022, we were talking a lot about bond yields. We're talking about the stronger dollar. In fact, right now, the dollar's even higher than it was back in June of 2022 when Microsoft warned, when Salesforce warned. How do those things play a factor in this tech trade?
Well, look, on currency, clearly, that's been, that could be a headwind. I think the difference now is that a lot of that's factored into guidance. Now, we got to see if that continues in terms of dollar strength. But we're in a much different situation today relative to, I think, what we're seeing from a demand perspective. That tightening environment that really actually was a big hurdle in terms of software, we're seeing the opposite of it because of where this AI revolution plays. So I think even though you could have some currency headwinds, it is not getting in the way of what I believe is we're going to be talking about NASDAQ 20,000. And I believe in the next 2 years, NASDAQ 25,000 is something that we'll be talking about.
Meanwhile, the tech giant isn't resting on its laurels. Nvidia's collaborations with Alphabet's Google Quantum AI and Tesla in robotics signal its commitment to pushing the edge of innovation. The fourth quarter revenue prediction of $37.5 billion bears testament to Nvidia's growth trajectory, driven by partners like Oracle planning extensive AI computing clusters. As revealed by a Benzinga poll, 48% of investors are convinced Nvidia will continue to leave its mark among the Magnificent Seven in the years to come. Of course, even a titan like Nvidia faces challenges. Analysts caution about potential short-term volatility, with some concerns over the newest Blackwell chip systems. However, these are the fine print in what otherwise reads like an AI fairy tale. Imagine the vast AI infrastructure AI demands, a playground for Nvidia's ongoing advancements. With 112% growth in data center revenue year over year, the skies appear boundless for this tech pioneer. Forecasts from Wedbush analyst Dan Ives suggest a ripple effect in the Nasdaq, possibly reaching 25,000 points, spurred by the butterfly effect of Nvidia's innovations. The company's foresight into the industry's future, including AI PCs and autonomous vehicles, combined with a foray into generative AI models such as Fugato, broadens their reach beyond the traditional techscape. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So again, your picks for us today are Snowflake and Elastic. I also want to talk about deregulation, the idea of some changes when it comes to the FTC and other areas that are regulators. Does that help either one of these names, or are they neutral to that?
Well, I think it's actually bullish, because in our view, with Khan going to be out, FTC, this is going to be significant in terms of deal making. I think these are companies that are going to go on the offensive. And then on the other hand, you're just going to have massive M&A from strategic as well as on the financial M&A side. And that's why software has underperformed. But if you look in 2025, I think a year from now, we sit here and we're like, software is fire. Because this is just the start of what I view. 9:30, 10 p.m. is the AI revolution. We're talking about $2 trillion of AI CapEx. Now software, they were on the velvet ropes behind Nvidia, Microsoft, the hyperscalers. Software is like, let us into the party. Party's here.
The party's here, okay. I want to get to our mystery chart. It was Palantir. So Palantir, having a huge year so far, and you just raised your price target on Palantir. So the street's at about 37 bucks. You're at 75 bucks. This stock's had a big run up. What's going to continue to move this higher?
Look, and the haters will continue to hate, as we know, in terms of the bears on Palantir. They are still underestimating when it comes to the software, the use cases. There's no product out there that matches what I believe what Karp and the team have done at AIP. So I think the enterprise piece, we're talking about something that could ultimately be billions of revenue. So when you actually look at what this means, $75, be like, oh, it's expensive. I look out 3-4 years from now, could Palantir be the next Oracle, the next Salesforce, the next SAP? That's what I think we're talking about. And that's why, look, the bears will come out of hibernation, talk about valuation, just to start what I view for the Messi of AI.
The lure of Nvidia's financial triumphs and technological superiority is not one to be easily ignored. The company's unique position as a leader in AI chips, capturing 80% of market share, alongside unyielding demand for AI applications, paints a promising picture for prospective investors. As Nvidia stands at the precipice of what Andy Jassy calls a once-in-a-lifetime opportunity, the AI giant is primed for continued triumphs. Though some might express concern over a gradual decline in growth rate from 111.9% to 49.2%, Nvidia's dominance and ambitious AI investments paint a much more optimistic future. Even amid a dip, savvy investors eye this as a golden opportunity to bag Nvidia shares, bolstered by the company's long-term potential and strategic expansions. Perhaps this isn't the time to simply watch on the sidelines, but to take a leap into the vibrant world Nvidia is shaping. As you ponder Nvidia's burgeoning empire, what are your thoughts? Could this be the definitive moment for redefining tech investments? Or is the market yet holding surprises under its sleeves? Share your views and join the discussion as the AI landscape unfolds dramatically. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.